Bo, are you there?
Yes, hello, can you hear me?
Yes, I can. Ein Hinweis, please, Bo, give me 1 minute, one moment. Ein Hinweis für unsere Zuschauer. Der nächste Vortrag, der findet komplett auf Englisch statt. Daher wechsle ich jetzt ins Englische. Our next speaker is Bo Yoder, joining us from the United States, from Maine. Bo is a professional trader. He has written 2 trading books, and Bo has an exciting presentation for us. Bo, now you are having 60 minutes for your presentation. I will be back in the last or 2 minutes and give you a sign for ending your presentation. To our viewers, an unsere Zuschauer, I have agreed with Bo that he can use the time fully with his presentation, and you can ask your questions by mail, by email, as detailed as they are. Bo will take the time to answer all your questions. Also wenn Sie Fragen haben, nach dem Vortrag gerne an Bo per Mail, wird sich die Zeit nehmen, Ihre Fragen zu beantworten. Bo wird ja auch dann seine E-Mail-Adresse nochmal selber hier vorstellen, hat er mir gesagt. Geht also nicht verloren. Ansonsten tragen wir sie drüben im Chat ein und dann können Sie sich rauskopieren. Und genau. Bo, the stage is yours. Have fun and enjoy your presentation.
Thank you so much. Let me share my screen, make sure that that's working.
Yes, you can share your screen with the mouse.
Yeah. Yes. Can you see that now?
Yes, it's perfect.
Awesome. All right. Well, thank you so much. I really appreciate the opportunity to speak with you all today.
Okay.
Thank you.
Bye.
Okay. Let's see. I got to hide that video. There we go. Okay. Well, I'm going to speak. Normally, I speak rather quickly, so pardon me if I sound a little strange. I'm going to speak nice and slow and clear because I know for a lot of you, English is a second language. So I really appreciate you spending the time here today, and I'm going to make it worth your while. This is really, really important stuff, and it's not spoken about much in the trading world. So I appreciate you taking your time to be with me. I'm here to talk about what I call the hidden payout payback cycle. This is the missing key for maximizing the consistency of your monthly profits in all market conditions. No matter what you trade or what trading strategy or system that you like to use, this is a series of universal principles. So these are true for any asset type, any market. So if you're trading German stocks, if you're trading Hong Kong, if you're trading the United States, all of these ideas will be the same because they're all based around human behavior patterns when we all gather together in an electronic marketplace. Okay. So before I get started, I have to share the standard legal disclaimers. And really, the bottom line of these is never trade money you cannot afford to lose. A lot of people get very excited about trading and they overcommit. And they put capital into their trading account that they wouldn't put into any other business, and they get themselves into deep trouble with that. So only trade money that is truly yours to lose. Now, so who is this for? Well, for most people, you get excited about trading, you learn about the markets, and you start to learn about trading other people's strategies from books, programs, courses, the internet. And it sounds very exciting in the beginning. But when you actually start to put these strategies and setups into real use, they don't work out as well. They don't work the way you expected. Or perhaps you've developed a strategy or a setup on your own that worked out really well when you were testing it, and maybe even worked out fine when you were paper trading it without real money, but seems to always go into losses and drawdowns and frustrations when you actually put real money on the line and start taking trades in the market. So if that makes sense to you, please pay attention because in our time together here today, I'm going to teach you about the huge breakthrough that I made that allowed me to finally understand why this happens and to fix it. And this is that frustrating cycle of being able to make money seemingly without effort when you're paper trading, when you're practicing, and then having so much trouble actually converting that behavior into real money profits when you come into the real money. Okay, so by the end of this training, I want you to understand why the markets take your money in this way and even worse, make you feel confused and maybe even crazy and very uncertain about your outcomes pretty much all the time, you're going to understand the mechanics behind why this happens and why it isn't your fault. So I want everybody who's listening to this presentation today to understand that you're not alone. It feels like everyone's making money but you, and you're isolated in this frustration of uncertainty and very hit or miss performance. It's not the case. Pretty much everybody goes through this. They just suffer in silence. And I want you to understand that there's a way out of this. And it's not something that's hard to understand. It's very scientific. It's very mathematically based. And once you understand why it's happening to you, well, then you can go and figure out how to fix it. Okay. So before we get into the training itself, let me just make sure we're all clear on the problem that we're going to talk about fixing here today. So in the beginning, you're excited about your trading. Obviously, trading is an amazing way to make money. I've been trading full time since 1997. So I've enjoyed that freedom that it's given me to live where I want, to work when I want, and pretty much have that kind of lifestyle that I choose. And for some people, that seems a little bit too good to be true when you first start learning about this business. But then you start gathering information and learning about all the different ways to approach the market, and you find something that you really want to pursue. So you start putting it into practice mode to see how things go. And you probably experience some wins early on. If you try it and it doesn't work, you probably would get discouraged and frustrated, and you would never continue on with trading. So most of us have a what's called a survivor bias, which is our initial experiences with the market were exciting and pleasant, and that kept us engaged through the learning process. So we have that good experience and we're getting excited. We start to put some serious money at risk. And then everything goes sideways. As humans, we don't like to blame ourselves for anything. So we tend to blame things that are outside of us, the strategy, the setup. So we figure, well, we lost money. That must be the strategy's fault. And so another trading strategy goes into the dumpster. You're discouraged, angry, frustrated. You can't understand why you were able to see such great performance, such high returns when you were testing the strategy, and that performance could just vanish as soon as you started trading it with real money. You may feel cheated. A lot of people get very cynical. They feel very paranoid, like somebody's out to get you. There's a conspiracy to steal your money. And these are all very normal reactions. So bottom line, you figure that out, that the strategy was a failure, and you throw it away and you move on. Okay. Now, this leads us to the seeking what we all call in trading the Holy Grail. I don't know how well it will translate, but we also call it the shiny thing syndrome, where people think that buying a thing or buying a new course or buying a new item or a new piece of software will be the fix for all of their problems. And this is true in many other places. I don't know if any of you are golfers, but certainly there's an entire industry in the golf world that uses their advertising and marketing to make you think that if you just buy a different club, magically you'll become a great golfer. And we all know that's not the way it works. Trading is very much the same. So this creates a cycle. You abandon the strategy that you lost money on, you look for a better one. Sure enough, you find a new strategy to get excited about. And again, it works great when you test it out in a simulator, and maybe when you start trading it with small amounts of real money. But then when you start to scale up and try to make some significant life-changing money with it, it fails, and you go through that whole meltdown emotionally, and you lose a bunch of money, and you're angry and frustrated all over again. And this cycle continues. Now, most people will go through this kind of a cycle a few times, get frustrated and discouraged, and quit trading. But for those of us who persevere and keep pushing forward, we know deep down inside that there's a way to beat this, and that certainly a lot of people have made hundreds of millions, if not billions of dollars in the trading world. So if they can do it, I can do it too. So it's like this itch in your mind that you just can't scratch, that you're almost there, that if you just figured out the right strategy, everything would turn around, and your real money trading would produce just as much profit as you've always been able to do when you're trading in simulation or demo mode. Then all that hard work, all the losses, all the frustration, all the discipline that you've exercised will pay off. And so the search continues for something that will work. Okay. So the key to this is what I call the payback cycle concept. And so, oh boy, that's interesting. well, I just lost my second monitor. So I may have to cipher what some of these slides are dealing with. Apologize for that. Oh, this will be an interesting challenge. So the payout payback cycle is essentially the understanding that the market will cycle into and out of alignment with the strategy or setup that you are working on. Okay, so we start with the strategy, right? The market is especially now, is a 24-hour-a-day, 7-day-a-week marketplace. It never stops. It never starts. So as humans, we need to take that continuous flow of information and break it down into something that we can analyze, that we can measure, and that we can contrast. And that's really what a strategy or a setup becomes. Okay. So hang on a second. I don't want to lose my train of thought. I apologize. Let me do this here. Make sure we know where we are here, because I'm losing my train of thought. All right. That's a bummer. Technology is a challenge for all of us. It's awfully nice that I didn't have to jump on an airplane and fly in 8 or 9 hours to be with you in a physical environment, but we deal with some of these issues. So the strategy is the way that you define how you're going to approach the market, whether you believe the market is going to be moving up, moving down, when you're going to exit, and when you're going to enter. That definition, by its the very process, is going to occur in a specific market condition and scenario, right? When you're developing that strategy. Well, as the market conditions change, as they always do, then randomly that strategy may go into alignment more, or it may fall out of alignment with the market. And this is the mechanism. This is the reason why strategies tend to work very well for a while and then to work very poorly. So it's not you're not making that mistake. It's actually this concept I call the payout payback cycle. So you're constantly going up and down these stairs for most people without realizing it. They internalize it. They feel like the changes in their performance are their fault. But in reality, it's just a cycle in the market that most people aren't seeing, aren't analyzing, and therefore don't know exist. Okay, so who am I? I started trading in 1997. I, like most of you, struggled for my first couple of years. And it was into my second year of trading that I started to make some of these understandings. I started to see some of the patterns in my own performance, tried to analyze, what I was doing when I was doing well and making money, and what changed when I was frustrated and struggling and losing money. And so this was back in the late 1990s. There was no social media, but there were these text-based internet chat rooms. And so I was bored and lonely, because trading is just, you by yourself sitting in front of a screen. And sure enough, there was a large community of traders out there. So I started interacting with people, and pretty soon I realized that my ideas were kind of unique and that they were really valuable to people. I come from a family of teachers. I love to teach and coach. And so that naturally, I started helping people optimize their trading edge. And this led to a really amazing career that's allowed me to write articles for a lot of the different trading magazines. I used to write a column for TheStreet.com. I've traveled all over the world. As you may know, I've written a couple of books for McGraw-Hill. And I think I got that on the next slide. Yep. Optimize Your Trading Edge is available in German. There's a German translation and a Japanese translation. So perhaps some of you have read that. If not, and you'd like to read it in your native language, please go check that out, because it goes through a lot of these concepts. So once I realized the payout payback cycle, I started to treat my trading strategies like a stock. I would track them individually. I would see the 6 cycles of gaining profitability, and then the profitability would stabilize, and then it would weaken. And these cycles became very, very repeatable and very, very forecastable. And that's what really led me to the breakthrough, which I have called the payout payback cycle. So if you think about it, and I've also had a chance to go trade with the institutional traders on Wall Street. And it's interesting when people ask me, what is Wall Street really like? I tell them it's not really the hedonistic world that you see in a lot of the movies. The most accurate portrayal I've ever seen is The Big Short. It's a very, very aggressive, very exploitive. People are always trying to cheat each other and laugh about it to other people's face. They don't really understand the process of value creation. They really see it like like a form of piracy where they're stealing value from different constituencies, and those people are just too foolish and dumb to figure it out. So that's who you're trading against, and that's good, because the arrogance and the hubris, the lack of humility of some of these people allows for some really profitable opportunities to exist. So I'd rather be free, wouldn't you? I mean, trading allows you to do what you want when you want. I live in a really beautiful place in the state of Maine, north of Boston a little bit. We race sailboats. You ski in the winter. There's just all kinds of things that you can do as a trader that you can't do, working on Wall Street or being locked down in that alternative world. And so that's what I want for people. That's kind of my mission. Some people have a powerful religious and spiritual experience, and they want everyone else to have that same experience in their life. For me, this is the equivalent to that. Being able to do what you want, how you want, when you want, especially during the times that we're living through with all the uncertainty politically and economically. My life, my family's life hasn't really changed. There are some supply issues. When you go to the grocery store, there isn't as much food on the shelves as we've seen in the past because the trucking industry has broken down here in the U.S. I know it's the same in a lot of different places across Europe. But other than that, our life hasn't changed at all, and that's something that's really, really valuable. As a student of history, and especially financial history, it's very interesting if you go back in Germany, and I'm a quarter German too, so I feel a connection there. If you go back in Germany to the Weimar Republic after World War I, there were war reparations placed upon the German economy that were ridiculous and just weren't possible to be paid. And so there was a period of great economic turmoil, as I'm sure you all know. What you may not know is during that time, there was a lot of inflation, of course, but there was a lot of people focused on trading the markets as a way to get ahead of inflation. So I find it very interesting that cycle is repeating. We're experiencing a lot of inflation in our world, and the markets are a great place to combat that, to protect the capital, the assets that you currently have, and to weather the storm. Because no matter what happens politically, no matter what happens, in health and in other aspects of human life, these markets will always exist. They have to. They are the core of any economy. And so you have an incredible robustness. You have a moat around your business. Your business is safe as a trader in ways that you just can't be in more traditional businesses. So hopefully that translates well and makes sense. Okay. So let's go ahead and talk more now about the reality of cycles in life and the markets. So let's define a cycle first off. A cycle is a series of events that are regularly repeated in the same order. Okay, so let's think about samples of different cycles that we all know about. Obviously, the seasons are always cycling. We go from spring to summer to fall and then to winter and back to spring again. There's the lunar cycle, the new moon to the full moon, and then back to the new moon. Solar cycles. Not many people are aware of this, but solar minimums and maximums. There's an 11-year activity cycle in the sun. We're currently at a very powerful minimum. There are a lot of theories that that's one of the reasons why we are experiencing an extreme weather condition, and also a lot of the volcanic activity that's out there. The theory basically goes that the bombardment of the Earth from certain particles from the sun actually precipitate clouds and create clouds, and that's what creates all the water that we've seen and the floods that we've seen around the Earth. This bombardment also changes the magma inside the Earth and can produce this volcanic activity. So we're kind of seeing some physical manifestations of the solar cycles. It's just an 11-year cycle, and it'll change as it always does. As a sailor and somebody who loves the ocean, the tides are, of course, an important cycle. High tide, low tide. You make very, very different decisions when you're on the water in a boat about what you're going to do based on where the tide is and whether the tide is coming in or going out. And obviously the cycles of day and night, right? We go from light to dark and back again. They're the cycles of eating breakfast, lunch, and dinner. Now, what's so interesting is, obviously, as I share these with you, this makes sense. We all experience these cycles. What is fascinating is people don't understand and don't really pay attention to the cycles that exist in the markets. because the markets have kind of like a sleep cycle. They're awake and active, and then they go to sleep, and you'll see that that market correct through time as well as price. And obviously the business cycles, and we're at the end of a number of different business cycles. And so once again, there's a lot of doom out there, and people talking about the end of everything and the collapse of the financial system, and all these different things, which may be valid. We may be going through the end phase of a lot of different kinds of business models. Certainly the just-in-time global supply chain is showing its weakness now, as we deal with all the effects of the coronavirus. So all these cycles are very present. Why wouldn't they be present in our trading as well? Weather cycles too. So in order to break down a cycle mathematically, scientifically, in a way that you can produce a significant outcome, you really have to understand the 4 laws of cycles. Number 1, you can't escape cycles, right? We can only choose to work with them for our benefit, or to work against them at our peril. It's the same concept that when you're on a boat, if the tide is coming in, and the current is flowing in your direction, your boat has to work a lot less in order to get where you want to go. If you're fighting the tide, you have to either wait for the tide to change, or use enormous amounts of energy to overwhelm that cycle in order to fight against it. And this is something that people do in the market all the time. They just don't realize that they're going long when the tide is going against them, or they're going short when the tide is rising. Second law, ignorance of a cycle is no excuse. Just because you're not aware of a cycle, you're still at its mercy. And these are massive forces which are totally outside our control. They're not things that we can ever conquer or manipulate. So you have to flow with them and not fight them. Law number 3, being aware of cycles allows us to make fairly accurate predictions. Let's take the most obvious. We can predict with incredible accuracy when it's going to get dark and when it's going to get light, when is sunset and when is sunrise. This is because of the constant cyclicality, the cycle of the way the Earth rotates around the sun. So the same thing is true in the market, and people don't understand this. The 4th law is that aligning with cycles can allow us to harness incredible power and help us accomplish amazing things. So how to harness the power of cycles? Well, first, you have to be aware that the cycle exists, right? If you're a surfer and you're wearing a blindfold, you can't see the waves. Therefore, you can't catch the wave. You can't harness the power of that wave. The second thing, once you understand that the cycle exists, is you have to align your actions accordingly, taking the right action at the right time, so that it's in alignment with the forces that are in play, right? You're catching that wave. That's the best word picture I can give to you. Now, there are all kinds of different cycles in the markets. There are time cycles. There are price cycles. I don't speak German, but I could hear the previous speaker speak about the Fibonacci ratios that are out there. There are tendencies for markets to correct to a certain percentage. There are all these different cycles that exist. Okay. And it's that cycle that takes a perfectly good trading strategy and makes you feel like it's worthless. And it's not. It's just in a bad cycle. Imagine if you read a bunch of books. This is probably the best way to explain it. And I hope this translates well, because it's really important. Imagine that you are a farmer. You've read 25 different books about how to grow food and how to be a successful farmer, but you've never done it. And so then, after reading all those books, you drive up to the farm, and you, because of the books that you've read, you know how to start the tractor, and you go out and you plow the field, and you plant the seeds, and you do all the things that you're supposed to do, that the books told you that were supposed to happen, and absolutely nothing grows, and you can't figure out why did you fail. The problem is you planted your seeds in the fall, and they didn't grow. It's the same thing. People don't understand the cycle. Therefore, they're trying to plant the seeds of profit in the market at the wrong time, and it doesn't work. Okay, this is a major reason why people experience large drawdowns and inconsistent results. You shouldn't have to take big drawdowns if you're utilizing payback-cycle analysis. And these cycles are one of the biggest reasons why you haven't been able to be consistently profitable every month, because what will happen is you'll have these periods where you make a bunch of money and you're very excited. And then the cycle will shift, and the strategy or setup that you're trading will be out of alignment with the current market conditions, and you'll give all that money back. It's not your fault. This is the most important thing I can share. If you get one thing out of this presentation, is that there's a hidden cycle that you're not aware of that causes you to feel like you're stupid and dumb and crazy, and that trading is a fraud and a lie, and nobody can do it, and it's all gambling. And that's not true, and it's not your fault. It's just a failure of observation based on a lack of information. Okay, so it's not the fault of your trading strategies, and it's not the fault of the folks that you learn from that strategy from either. In fact, I've actually trained a number of people who have who you may have bought things from, who've gone out and written books and had courses and had trading businesses teaching others. And a lot of them came to me because of this problem. They had something that worked really well. They wanted to share it because it was such a fantastic trading strategy. And by the time they built a business around teaching and sharing that strategy didn't work that well, and they were in a very difficult ethical dilemma. So by understanding payout payback analysis, I was able to help those people get more consistent and serve their communities better. So what is the payout payback cycle? In a nutshell, it is that. It is the concept of trying to swim against the current of money in the market. Because just like water, the way water sloshes in a bucket, money sloshes around in the economic markets. And so understanding that payout payback cycle is the key to knowing when it's time to be active and when it's time to be passive. Very, very interesting. There's a lot of evidence to show that the Chinese, using the junk rig form of sailing, were able to cross the ocean and land in South America and explore South America well before Christopher Columbus ever set foot in the New World. The problem with that style of sailing is it can't sail against the wind. So they would have to sail towards the Americas during one season, and they would have to wait until the winds shifted to sail back in the other direction. It's this money tide. It's this cycle of money that most people don't really understand, which is what we're going to try to analyze, track, measure, forecast, and take advantage of. So I've talked a little bit already about how the payout payback cycle works in alignment or out of alignment. It will manifest itself in a collapse of profitability, a series of losers, where the same strategy worked very well, and you were perhaps at a winning streak in the past. And again, it will feel like you're doing something wrong. And the natural human tendency is to try to figure out, what to change to make that thing better. It's my experience that you can't make it better. You can only remove yourself from that particular strategy or setup and wait until the payout cycle kicks in again, until the edge explodes, until the win streaks are present, and then get back involved. So again, I'm a little sensitive to making sure that this translates well so everybody understands what it is I'm saying. And again, I'd be happy to take questions via email, and I'll share that email address at the end of the presentation here, so you can expand on this if you'd like. But when the way for you to think back in your own trading life is when everything was going well, trading seemed effortless. You didn't really have to put much energy into it. It wasn't stressful, and you produced a lot of profits. That is the hallmark behaviorally of a payout cycle. Okay, payback cycle is the opposite. Nothing seems to work. It's all frustrating. It just seems like no matter what you do, it ends up costing you money. Okay, so that's what we're looking for. All right, now hopefully at this point you understand that this cycle exists, and that's one of the most important things, because once you understand the cycle exists, we can start to talk about what to do about it. Okay, so here is a chart from a spreadsheet that visualizes the payout payback cycle. Okay, so now this line right here is the break-even line. This is a chart that is tracking the profitability, and so I break this down into something I call EV, or expected value, and this is a metric that says for every dollar that I put at risk in this trading program, over a certain period of trade, so I have an average, it produces this much in profitability. So what you're seeing here are EVs that are fluctuating from negative, from losing, up as high as $1.50. So every time I'd put $1 into this trading program, when the profitability was at its peak, I was getting about $1.50 back in profits. Okay, so you see how this fluctuates? And isn't it interesting? This is literally a chart of my profitability trading the same strategy, the same way, with the same rules and management techniques. So this right here is literally the proof of the payout payback cycle. Now, like all cycles, they aren't necessarily perfect, right? Here we have a peak in profitability that was really great. The next payout cycle, it was profitable, but it didn't peak quite as high. Sometimes these negative times where you actually have a negative edge and the more you trade, the more money you'll lose will get really steep and ugly. But notice how there's a cyclicality here. And notice how this cyclicality has a rhythm. Okay, once you find that rhythm, that pattern, the same way that you focus on trading price and time and look for patterns and rhythms within a particular stock or a particular asset class, you now can actually look at your trading strategies individually and come up with this same kind of analysis. So what does that allow you to do? Well, when we see the EV, the profitability of a particular strategy growing, we can see that our market advantage is growing. And just with these two little cycles, you can see when it grows very quickly. This is a very profitable time here of expansion. Then the market advantage shrinks as the cycle shifts and goes in the other direction. Okay, so now notice what happens here when you start to optimize your trading edge by surfing these cycles. So this is an optimized equity curve, and this is from one of the live trading challenges that we did. We did all this analysis in real time, and I'll give you an opportunity to join me for one of those here in the future here at the end of this presentation. But you can see how smooth that equity curve is. All right, now two things to notice. One, notice how the equity curve kind of goes sideways, and then it goes up, and then it kind of goes sideways, and then it goes up. So what you're doing when you exercise payout payback analysis and use that to smooth your equity curve, rather than having big drawdowns where you lose a lot of money during the payback cycle, the time when the market is out of alignment with your style, instead you'll lose time. And you might have some frustration. It might be slow going. You might have days or weeks or even months without any qualified trades. But if you look at your equity curve, all you're doing is going sideways. And so that's a much mathematically superior and emotionally superior way to go through a time of frustration. Now, of course, you're not stuck trading one strategy and setup forever. And so what you do is you develop a series of these analysis models, and you find which strategies and setups are showing a cycle that is against one another. So in other words, when one is struggling and is experiencing a payback cycle, then you want to be abandoning that, pausing your trading operations in that particular strategy, and you want to be shifting into the strategy for whom that particular market condition is perfect. In doing so, you can really smooth your equity curve and have a much more pleasant experience. This also allows you to compound at a much higher rate and can produce some really exceptional gains. So that right there is the holy grail. It's not to find the right setup or strategy. It's not to find the right asset class, the right, to argue that options are better than stocks or stocks are better than futures or to anything else. Instead, it's to focus all of your energy, not so much on market timing, but and picking the right stock, but actually on optimizing your edge and edge timing, looking at how your profitability in a particular strategy or setup grows and then collapses and then grows again, and then using that as your timing tool of when to get aggressive, when to take more risk, when to be more passive, or when to stop trading altogether while you wait for that seasonality to change. Just the same way that the farmer goes very, very quiet in the winter, tends his animals and repairs his equipment, but really rests and gets ready for the very, very busy time that will happen in the spring. It's this same metaphor. So in spring, your strategy is growing in its edge. If I go back to this previous chart, in spring, the market advantage is growing. You're very active. You're very aggressive. You're taking a lot of risk. Then during the summer period, the edge is kind of holding. And so at that point, it's more of a grind. You know, you're less aggressive, you're more careful. You use more filtration to pick the highest quality trades. And then as you start to see that advantage collapsing, that's equivalent to the harvest. You've taken all the money out of that cycle that's available, and now it's time to put that food into storage and keep it safe for the winter season when money won't be available. Okay, and so it's another cycle that's in life. There is no holy grail setup. There is no holy grail strategy. All setups and strategies that exist, that have ever existed, show these effects. And how can I say that? Well, I have a 20-year plus career trading my own strategies, developing my own setups and strategies, and more importantly, I've been given the great gift through the public work that I've done and the books that I've written and this public speaking that I do, to have had a consulting career where I've worked with many, many different individuals and institutions to optimize their trading edges. So people will come to me, they will engage me as a consultant. We will look at their particular edge in the marketplace. We'll break it down. We'll find ways to optimize it and make it more profitable. And then we will start to look at its cycles. And we'll start to find out when that strategy should be traded and what keystone events there, because there are certain behavioral and temporal markers that every strategy or setup exhibits that tell you, okay, basically the harvest is over, the money is gone now, and anything you do in the future will probably lose money and be frustrating. So it's time to abandon that strategy for now and let that season of winter pass. And let everybody else lose money in that strategy while you go off and be productive in another strategy, or take a vacation, do whatever you'd like with that time. So what I want you to think about now that I've opened your eyes to this possibility, hopefully this is a different way of thinking for many of you. I want you to, and again, I can't emphasize enough, this is not some sort of theoretical, artistic vision for trading. It's very, very much an analytical process. It's all about measurement. It's about cycle tracking. You put all this information in a spreadsheet, and you can see the edge growing. You can see the edge collapsing. And once you've put in that work, and it takes a fair amount of work, fair warning, this is not. This will make trading easy and very, very profitable at levels that you probably wouldn't believe if I told you. Because what you're basically doing is eliminating the losing periods. So imagine how much money you've left on the table if you could have known ahead of time that the market was going to be bad for your particular style or strategy, and you could just simply avoid losing all that money during the drawdown cycles, right? I know I've left a lot of money on the table before I figured this out, and I'm sure you would too. So having changed your thinking, I want you to understand that this process is a process of cycle analysis and forecasting by reading these different pressures that make a strategy work or make it a breakdown and collapse. And it's very simple, similar to a weather forecasting process, where you take observations, you look at barometric pressure, you look at wind speeds, and it's not perfect, but you can get a very high degree of understanding about what that storm is likely to do. And that is the metaphor that I want you all to understand. So it's a very scientific process. It's very controlled, very reproducible, which is why I can have so much confidence as a consultant when I go through the interview process for the client. I know I can help that client, right? If they're not doing this analysis, I know they are leaving huge amounts of money on the table, and I can help them capture that money. And that process is a lot of fun. So it's like putting together a puzzle. It's going to take time. I can't just tell you, what the answer is going to be for your particular setups or strategies. What you have to do is learn the process. Learn the process of gathering the data, analyzing the data, and then seeing those cycles and knowing how to manage that cyclicality for optimizing your trading engine and optimal profitability. So that's what I want to share with you and give you the opportunity to go through with me in the future here. So I'm not sure if it translates, but in our business world, we talk about KPIs, which stands for Key Performance Indicator. These are things within the business model that we would look for and try to expand. And trading is a business. People don't give it the respect it deserves, but it is absolutely a business. And I think it's the best business in the world. You know, I always joke, there are the three best businesses in the world. And the best business in the world would be to be an author like Tom Clancy or J.K. Rowling. You write a book, you get paid millions for those rights. Then you get paid tens of millions when they make movies from it. And it's a passive income stream that just keeps sending you money for the rest of your life. But it's very hard, if not impossible, to become somebody like that deliberately, right? It takes a lot of luck. It takes a lot of timing to be in the right place, the right time, with the right message in order for that to happen for you. Trading is the business that is the second most profitable in my experience. I have an MBA from Boston University. I've studied business models my whole life. Back before I started trading as a stock analyst, I was looking at these different businesses and studying their business models with incredible depth. So I know what margins are out there. I know what the business cycles are like for a lot of different industries. Trading, you can't beat it, period. There's nothing that's better. There's nothing that's less risky, ironically, if you understand risk management properly. So the first thing that I want to teach you, if you want to go a lot deeper with me on this and go through an educational process, which I'd like to share with you, is you got to figure out the KPI. You got to figure out whether you have this beautiful car or this. And for most people, they don't understand the difference when they go and start a new trading process with a new strategy or setup. They all hope it's going to be this. Unfortunately, they often end up with a pile of junk. Okay, so it's really important to have those key performance indicators and to understand and have done the analysis on a strategy just the same way you would before you bought a business, to understand whether it's worth your time and money. And that's an important concept. If you work with me, you'll notice I'm a very time efficient person, because I know that time is much more important than money. You can always make more money, but you can't make more time. And so not wasting time, really focusing your efforts on the things that are going to give you the biggest return is something that I've really focused on and gotten very good at. So this also, by understanding the key performance indicators, you can have measured what the profitability is like. You can now begin to make very clear forecasts, the same way that a business could forecast its growth. And they're not perfect, but you're going to understand that there's a range of results that you should achieve. And that will allow you to close the gap between your expectations and reality. Most people have this false sense that they can just push some buttons and make a bunch of money and quit their job and life will be great. That's not the way it works. The real wealth that trading builds is by compounding, and the compound interest process is exponential. So think of it in terms of doubling, right? If you double a $1,000 account, you have $2,000, right? You've made $1,000. It's really not that exciting. If you double the $2,000 account, you now have $4,000. Okay, that's a little bit better, but still not very exciting. 4 becomes 8, 8 becomes 16, 16 becomes 32, 32 becomes 64, right? Every double, you've gone through the same amount of energy and effort to double the account size, but now the money starts to get bigger and bigger and bigger. So your number one job as a trader, if you want to build wealth, is to survive your learning curve, to stop the losing, and get to a place where you have consistency. Because with consistency, you can actually produce a lot more money, a lot more wealth over time than you can with an aggressive home run mentality where you're trying to almost buy a lottery ticket or gamble and win. Okay, so we're going to talk a lot about that. And again, everything I do is data driven. You'll see it. It'll be very much proven when we go through this scientific process together. Okay. Next, there's a sea of information out there. Again, time efficiency is really, really important to me. So I'll show you just what you should look at and mostly what you should ignore. And you'll be shocked at how much complexity you can throw away, how much time and energy and effort you're wasting on things that aren't actually impacting your edge. They feel good. They make you feel smart and clever. But what the bottom line is, they're not really helping you make more money more quickly with less work. And so by studying this, I can show you the different areas that really do produce that return for you. So I want to bring you through this process of the payout payback cycle. I want to teach you all the different steps of analysis. But unfortunately, that's kind of where most other courses will stop, right? They'll teach you the thing. And if you've ever felt abandoned in the past with any other programs, that this is the problem. So they teach you something conceptually, just like the farmer who read a book on how to grow crops. But then once you actually show up and have to do the work in the real world, there's nobody there to help you. So I think that's intellectually dishonest and wrong and immoral. So I never offer any kind of training without a big portion of interaction and support. So if you go through this process with me, we're going to do a lot of this stuff in the real markets in real time with a lot of interactivity. And for me, I really believe that the ideas are important. And honestly, you can take everything I've shared with you today, just that concept of payout, payback alone. You could, go through all the work and effort to build your own analysis process and figure it out for yourself. But why waste all that time? I literally have spent 20 years getting this right and getting it to be as efficient and powerful as possible. So why not let me help you? I enjoy it, and watching people transform their lives is a big part of what keeps me interested in the markets. Because quite frankly, after 20 years of trading, I don't know how many trades I've taken, but it's well over 10,000. Trading isn't that exciting anymore. It's kind of boring. It's very repetitive. My process is very much prescribed. So it'd be a little bit like being a baker. You get up every morning and you make your bread and it's delicious and everyone loves it, but it's the same thing over and over and over again. And that gets really, really tedious and frustrating. So my teaching operations allows me to bring some of that excitement back, to be reminded what it's like to have your first, profitable month or consistent year of trading. And I just love that. So let me help you, and we can have a great adventure together. So if you don't challenge yourself, you'll never realize what you can become. So what I want to do is offer you a chance to go through a learning process. And again, I'm a little challenged here because I've lost my second monitor, so I'm literally just doing this from memory. So pardon me if this is not as clean as I had designed it. Again, trying to make it work for those of you for whom English is a second language. But I've put together a trading program utilizing all these different concepts, and I want to offer that to you here today. So the payback cycle analysis program is normally $2,000. I want to bring that down because I think we are at a very peak point in our economy, in our market. You watch, the next 60 to 90 days are going to be extraordinarily destructive to the world economy. I don't think people understand the ramifications of the collapse in China. There's a very important deadline that's going to, I believe, lapse on the 24th of October, when this Chinese real estate company is going to have to actually admit that it's defaulting on its bonds. That will have great ramifications throughout the economy. We have all the health issues as we go into our cold and flu season. I think you're going to see a lot of people dying this year that will make our previous years pale in comparison. It's going to be a very, very difficult time. The supply chains are not going to get better. So it's never been more important to have the kind of independence that you have as a trader. So I'm really glad that you're all here. You're thinking about trading, whether you choose to come with me or not. You're doing the right thing. Because if you're stuck in the traditional economy, you could have a very, very difficult year. And so I want to really make sure that money is not the reason why you say no. If this resonates with you, I want you to be with me. I want to walk you through this process, and I want you to understand how it's not easy because you have to do a lot of work, but how simple the trading process truly is. Okay, so I want to make this program available for $1,000, and that's just valid for you here today. So that will go away at the end of today. So that's what I've got for you. Let me just pause for a second and say, if you have any questions, you can email me at info@boyoder.com. info@boyoder.com. You'll see that at the bottom of your screen. If you'd like to join me on this payback cycle analysis program, go to boyoder.com/learn, and we'll go through it here. So let me tell you a little bit about my vision for the arc of this program. So again, I'm a very realistic person. I don't theory is important because it gets people to understand concepts that they may have not had in their mind before, but action is where everything really happens. This is a doing business. You don't think about trading and make money. You actually have to push the buttons and put the capital to work and take the risk. And so I really believe in learning through experience, learning by doing. But it's wasteful to learn by doing unless you have somebody there to help coach you and mentor you. And so that's how I've designed this program. So if you choose to join me, go to boyoder.com/learn. And by the way, as our economy kind of collapses, I'm seeing a lot of very big breakdowns in the tech world. So if you go to that website and that order form doesn't work for whatever reason, please don't give up. Email me, info@boyoder.com. There are often issues in the credit card world with international orders. So don't pass on that. Email me and we'll troubleshoot that. But here's what we're going to do. I'm going to take a very, very simplistic trading strategy, right? Because I want to take away everyone's excuses that complicated and clever, analysis tools and all these things are what make you profitable. I'm going to take the most simple trading strategy you can imagine. We're going to go through a process of measuring its edge. We're going to go through a process then of looking at that data, figuring out how to optimize its edge. And then we're going to go take that edge, and this will all be, in the real markets. I do this work with a screen share open and a recording, so you're getting it the recording as if you're sitting looking over my shoulder, and all the recordings are available, of course, whenever you're able to watch them, because we all are at different time zones around the world and the country. Once that edge is analyzed and we understand where we are in the payback cycle, then we're going to initiate a trading challenge. And we're actually going to start that next week. So what I'll do is I'll open up a small account and I'm going to challenge people to think differently. I'm all about paradigm shifts. I don't think you really understand the wealth building potential of the markets. So instead of trying to make 20%, 10%, 30%, what we're going to do in this trading challenge is we're going to use some of the more aggressive optimization techniques that I've used in my career to optimize that for that particular trading strategy where it is in the payback cycle. That data analysis will give us the confidence to be very aggressive. And so my hope is that we can double that account several times before the experience is over. I haven't done one of these trading challenges in over 10 years, but the last time I did it, we did 5 different cycles, and 200, 300, 400% returns within those cycles. So this is a very different way of approaching trading. It's a very different way based on the payback cycle analysis. Also, I've done an enormous amount of research in neuropsychiatry and the way the brain works. So I also have a bunch of different ways to make this trading process easier mentally and emotionally, so that you don't introduce the kind of human error that can often be the case. Because in case you haven't realized it, and it's its own presentation by itself, most of trading mistakes are made through emotional, impulsive actions rather than a true problem with a setup or strategy. So I would love to have you be a part of this. Again, we're going to start the live trading with real money in the next week or so. If you'd like to have all the detailed instruction on how to go through the steps of payout payback cycle analysis and have me guide you, since I'm the one who created it and invented it, have me guide you through the steps, I'd love to have you join me. boyoder.com/learn. Again, if you have any kind of technical issues, please email me, info@boyoder.com. And again, if you have any questions about this process, I apologize. I'm sure there's some friction with the English language translation. And then also I lost my second monitor. So I literally made this presentation up based on my knowledge rather than the script, which I had laid out so logically. So there's a great lesson right there in how planning can sometimes, all the planning in the world can't produce a great outcome. So you got to have that kind of a structure. You got to have that knowledge So when the world throws you a challenge, you can overcome it. So hopefully I've made myself understood today. I'd love your feedback. I'd love your questions. I love interacting with people and helping them understand these concepts, because these are things you probably have never heard before, and you really, really need to understand them. They are the key to consistency. They are the reason why most people struggle with trading, and I'd love to help you solve those. So I think that's about all the time I have here. I'm trying to think of what else I could add in the last 4 minutes. I think we've covered all the items that are important. So just to recap everything we've talked about, the reason why most people have a manic depressive, a exciting and frustrating cycle of experiences in the market where you make money and you lose it all back, and you make money and you lose it all back, is because you don't understand that there's a hidden cycle there, and that when the market is in alignment with your strategy or style, everything works great. And when it's not, it doesn't work at all, and it's horrible, and you lose money. That is not your fault. However, now that you understand where that's coming from, it's your responsibility not to make those mistakes again, and to discover that payback cycle for your strategy, so that you can avoid wasting your time and throwing your money away on an edge that's just not going to work. In other words, you're not going to go plant your crops in the freezing cold in the snow. It's just not going to work. So if you understand that one concept, my time has been worthwhile here today. Again, I hope that this has gotten through and you've understood it, because it's a very, very powerful concept, and it can produce a kind of consistency of return that you probably have not seen and probably wouldn't imagine is possible until you actually experience it. So that's what I'm challenging myself to produce for you in the real world, so you can all watch it. Hopefully by watching me actually go through this process and do it and produce returns that make people astonished. It will open your mind to what is possible, and then you can do that for yourself. So that's my goal for you. I really appreciate your time with me here today and the opportunity to speak with you. Any questions? info@yoder.com. And if you'd like to join me for the trading challenge, again, we're going to get started on that here in the next week or two. Please go to yoder.com/learn.
Thanks a lot. Thank you, Bo. Thank you very much for your inspiring presentation.
Yeah, you're welcome.
Yeah, thanks. I enjoyed it, and our viewers too. We have no questions at this time, and I hope that you will get many, many questions from our viewers in the next time. We will see.
Yeah, please do. I'm available. info@yoder.com. Thanks again for everybody's time and attention, and for hosting, Andreas. I appreciate it. Hopefully we'll talk to you again soon.
Ja, liebe Zuschauer, Sie schreiben bitte, wenn Sie noch Fragen haben, an Boris. Wir haben seine Mailadresse eingeblendet. Und ja, der nächste Vortragende ist schon da. Bo, the next speaker is already waiting. Now I'm having to say goodbye to you. Thanks a lot for your time.
Thanks, everybody. Have a great rest of your day.